So what a week last week, eh?
Very nasty week. It was, the week was all red. Let me just pull up the Nasdaq futures really quick and move into today's day, and let's look into the week. It was
Yeah,
a bad news week
there's
all
been
around.
constant sell-offs.
hmm
There's been constant sell-offs like every day for the whole week leading up to Jackson Hole.
Yeah, and I think we talked about this last week too. And it was like, hey, the moment the PPI data came out, from
Yeah.
that date, we just had a continuous sell-off. That got pretty bad. And then I think the not only that got pretty bad, the even more grim part was that people, including us, we were pricing in an even larger sell-off.
Yeah.
But then Jackson Hole happened.
Yeah. So let's talk about that for today. So we made some comments on why the market's kind of sold off leading the Jackson Hole and what Jackson Hole did that caused the market to rebound. And essentially, the sentiment was that after the PPI data came out and after the FOMC minutes came out, it was clear to the markets that the Fed was quite hawkish in the sense that they were more data dependent. They wanted to see whether or not the data would actually justify a rate cut. And there was genuine fear that the tariffs would cause more and more inflation.
Right.
So leading the Jackson Hole, they really did think that Powell was going to rattle the markets a bit more by being hawkish. But in the transcripts that came out at 10 a.m., it turns out that was not as bad as it sounds, because the biggest takeaway within the transcript was that he acknowledged tariffs was a one-off cost. And while it wasn't truly reflected in the prices yet, he recognized that he can't be super hawkish for an indeterminate amount of time because the tariffs are, at the end of the day, a temporary bump in the CPI data, and it won't be a systemic push for consumer prices.
I completely agree, at least in the short to medium term. I think especially now that the trade conflicts, at least this month, have settled down. There don't seem to be any more changes, and so I mean he's right in the sense that it's going to be a one-time bump, and I think especially more than the one-time bump, I think he was more concerned about the labor market. I think, for example, if the labor market was doing okay, I think he would have been hawkish. But I think the reason why he's less concerned is that he's more concerned about the labor market, because we've seen unemployment rise up. I think we're at 4.2% now. I can pull up the data on my monitor really quickly. Unemployment rate, at 4.2% now, up what is it, 3%? No, 3.5%, 8%. Roughly 3.9 from the start of the year. So that's quite a big rise in unemployment. From what I've been reading online as well, people are projecting that unemployment was going to rise as far as 4.8% in the next 6 to 8 months. And so I'm sure he must have more data on his side and make the more informed decision. But I'm pretty sure that the labor market was the thing that was worrying him the most.
Yeah, I think so too. There were a lot of downward revisions over the last several months of employment data and job creations. And I think that in terms of labor slack, we're not really sure yet what effects tariffs have on the employment situation. And I think that to be a bit dovish here could be good for financial markets, because you're providing an acknowledgement that tariffs are causing a weakness in the labor market. And, knowing whether or not Powell is interested in seeing that weakness becomes stronger, whether or not the labor market becomes weaker for the economy, the financial markets will react. And you kind of see that playing out in risk on assets, because when Jackson Hole happened, assets like Bitcoin really reversed significant amount of selling. I think it retraced around 50% of its decline from all-time highs.
Right. Yeah.
Looking at Bitcoin right now, it's selling off a little bit, but I think it makes a little bit sense because it needs to consolidate, and there was such a huge gap up. But I think that we can get that confirmation on Monday if the markets end up continue like going up with a sense of euphoria. If it continues going up, I do think there is more room to run on risk on assets. One of the biggest assets that I've seen so far that has made a run up was Ethereum, and it's still continuing to go up. So I feel pretty good right now in the sense that risk on assets are probably going to perform pretty well, even leading into September.
I mean, I kind of get it. At the same time, I am more cautious. So if we think about it, right, why are risk on assets like the Nasdaq, like Bitcoin, like the market as a whole, moving upward, is all because of the positive sentiment that is coming from the repriced in rate cuts. I mean, let's talk about like reason why we had the all-time highs the week before last week to even happen, and that was because the data was pretty bad. It was like not terrible, but the data was pretty bad. So then people were expecting more rate cuts to happen, and so with that, the expectation of more rate cuts, we saw the market hit all-time highs last week. And after the PPI data came out, and the FOMC market minutes that happened on Wednesday, or the FOMC minutes that happened on Wednesday, the transcript from the July meeting, we got the confirmation that the Fed wasn't really sure what to do, and while the expectation was 2 rate cuts, based on recent data, the market was speculating that we might only get 1 rate cut. And maybe not even in September, maybe only in October. But when Jackson Hole happened, now we have priced back into rate cuts, 1 September, 1 October, probably about 25 basis points each. But we're aiming to hit all-time highs, not because the macro is good, but because the sentiment on the expected rate cuts. I think that's very dangerous because you're basically growing on sentiment. There's the underlying, the macro, the underlying value is shaky. I feel like I feel like there can be any level of catalyst, like any catalyst event can stop this upward momentum. And so I am wondering if this is a bull trap.
That's a great point. And I think that to answer and push on that, I would say that it will depend on what happens on Monday, because we've seen a big flush on the system, right? QQQ and Bitcoin both hit the rally zone.
Yeah.
And that has flushed out a lot of longs. I would not be surprised that when 10 a.m. popped all the markets, there were a lot of trapped shorts. And whether or not they're getting margin called on Monday, that can help exacerbate the pump up back to at least above the KRM line and potentially back to near highs before selling off. And I think from a technical basis, it does favor bullish sentiment for now, just because the rip up was so fast compared to the sell-off. And everyone was conditioned that the sell-off would just keep going and making new lows. So my opinion on that is that we let the system, do as it tells us and follow it accordingly.
Yeah.
It seems to me that the momentum is shifting to become bullish again. And I think that you are on the right track where if anything bad happens, like, a bad PCE data coming this Friday, for example, that can definitely shift momentum back to bearish bias.
Right.
But I think, like Powell, we will have to be data dependent before making such a claim and saying that, the market's going to continue drilling. Just because that both these asset classes are still in long-term bullish trends at the moment.
I mean, that's very interesting because I think I have to agree with you that it's all going to be data dependent. But let's take a look at what data really is coming. Next week we really have the big thing being the core PCE. The week after, you don't really have too big of a data release. You have unemployment data on Friday, September 5th. Everything else is maybe less relevant. And then, of course, on 11th, you have the inflation data coming back. And so September, I mean, like in the 3 weeks that are coming up, this was all PPI on Tuesday, September 10th. So in the next 3 weeks, there's only one big data release, I would say. And so it feels like, if the momentum sticks on Monday, as you say, I think the momentum will stick for quite a while, and at least until the data releases, or some external geopolitical event. I mean, while we're talking about geopolitics, I mean, I know that obviously it's very hard to predict the state of the world in the current situation. It's very volatile. But from what I know, what do you think are the chances of any geopolitical disruptors in the next couple of weeks?
That's a great question. I think that for geopolitical disruptions, it's usually around energy related. So, for example, Middle East conflicts and other strike in Iran, that can definitely stir things up. But if we're looking at like main events that have already been ongoing for years now, like Ukraine war, something happening in Gaza, for example, I don't think those events that have already been happening for many years are going to trigger the markets to rally or sell off. The biggest trigger point again remains energy, and I'm gonna pull up this the system on XLE, so the index for energy. Yeah. So energy has just spiked up recently over the last couple weeks, and it's close to becoming bullish again. So who knows? Maybe that means there might be some sort of crisis that pushes energy back up, and that might lead to more inflation. I just don't see that happening anytime soon. And I think even if they were to happen, the market will quickly adapt and rally back after it dips. And we've seen that happen many times already.
Yeah,
we made like an episode
so choppy. Yeah. Energy's just being hammered up and down based on lots of events in the market.
Yeah.
I mean, sustained energy high would be very, very bad for the market, right? Because it just means that inflation's here and sticking into the market.
Yeah. It would be stagflationary, and the biggest risk right now overall to the markets is stagflation. That's what's been causing this off to begin with. They think that the labor market is weakening, but inflation is starting to get stronger, right? Go up over time, and it might even hit 3% sometime in the next couple months. We're not sure how long that will take, and we're not sure when it will come down, and whether or not if it's going to be transitory for 2 to 4 months or it's going to last for a whole year.
Right.
So that level of uncertainty can make it very difficult for businesses to invest in new businesses. And we may see that being reflected in the employment data months down the road. So I think that's a big takeaway. The other takeaway is the fact that there seems to be some sort of disruption in the labor market due to immigration laws. So something that we haven't really discussed about is the fact that Trump's administration has been deporting a lot of immigrants and essentially making it harder for agricultural businesses and other businesses and smaller businesses from using immigrant labor for low labor tasks. So that might also be reflected in inflation as well, and also maybe reflected in the employment data as there's less jobs that are created. Again, I don't know how influential these policies will be because they've only been recently implemented, and it may take months before we see the final results of these policies. But it's already creating a chilling effect in the sense that there might be a lot of people who may not feel like they feel safe, working in the U.S., especially if they're foreign workers or undocumented immigrants.
Even I mean, that's just to speculate on my own end. I think even there have been some concerns about people with work visas in the U.S. and then their continued stay. So, well, I think we shouldn't delve into that. But I think I do agree with you overall that we have a lot of pressures on the labor market. One is from the immigration policy changes and the things that are happening in the U.S. regarding that. The other was obviously the tariffs. I feel that's gonna be a huge impact on small businesses both here in Canada and U.S. Especially the businesses that were on the border cities, counties that were relying on just transport of goods between across the border. So that's gonna be pretty scary. I think it's a hard time for small businesses, and I'm wondering what can be done by the administration to support them, because obviously, right, in a big picture world, if we don't support the small businesses, they never get the chance to be big and compete with the monopolies, the big competitors. So
Exactly.
I mean, I think a third worry that we haven't talked about too much, at least not today, is I think also the worry about the labor market and AI. Let's look into the data, right? I mean, I think the interesting stat I remember seeing was in the last quarter, there was more spending on AI infrastructure, hardware, GPUs, data centers, etc., than all of what the US spent, what US consumers spent.
Yeah.
And so that's very scary. And obviously, when people are putting so much money into AI, they're expecting returns. And I think one of the returns they're expecting is that to automate a lot of the positions, automate a lot of the tasks that are typically done by humans. I think we're seeing the effects now in call centers. There's a lot more, automated call centers that are already popping up, and so even there, I think we might be starting to see, AI genuinely replace humans in positions. I think, right now and in the near future, I think the positions at risk are the lower stake positions. The positions that are maybe not as challenging or not as what's the word for it? Mentally challenging? I'm not so sure.
I think the word you're looking for are positions that don't require a lot of technical knowledge,
right,
or just knowledge in general to complete
right,
the job.
right. I mean, yeah. I completely agree. And I think like in the short term, these are the jobs at risk. But I'm also just thinking about what things would look like 3-4 years from now, where the middle position jobs are at risk. There are already claims being made by these top AI companies that you don't need a programs anymore. There can be one man billion-dollar companies.
Yeah.
You don't need a software team. You may not need a technical team. You may not need a marketing team. And so while I think that right now is just an exaggeration of what's really happening, but it's beginning to feel more and more real. So I mean, I completely get the position on the Fed. I'm sure the Fed must be also looking into the AI future. I don't think it's as important right now, especially the more short-term thing. But I think the Feds are on the right track, doing the labor market first.
I agree. I think that they are doing a great job in just being very patient and also being very transparent in the market and being appropriately dovish. If they were too hawkish right now, when markets are already scared and terrified of the tariffs, I think that would just cause more chaos. But if you're creating more of a mixed message where you're understanding that the economy might require rate cuts after almost a year of being on pause, this can help communicate to the markets that you might be pro-market, you might be pro-equity, and you're willing to create some slack so that this euphoria that we have might be actually be based on something rather than just on pure sentiment.
I hope so. I mean, it definitely feel like a house of cards type situation where we're building upon, we're building equity, we're building growth on factors which might not be grounded. And so I really worry, not in the short term, but in the medium term, of a collapse, or if not a collapse, a large pullback. A consolidation of like more than 15-20% in the market.
So I think we can leave it there. One more thing I guess we can kind of mention is a little talk on Intel's new acquisition, right?
Yes. So the US government, they bought into 10% stake of Intel. That's terrifying. Or is that terrifying? What do you know? What do you think?
I think that it definitely is eyebrow raising, just because of the fact that the American economy has prized itself for being completely free market and letting the market decide what to do. And a acquisition of Intel, a partial acquisition of Intel by the government, is essentially communicating to the markets that you're bailing out the company because it's not doing so well. And I think that while it might make sense from a national security perspective, because chips are super important for defense and protecting and insulating their supply chain towards, relative to China, for example, I do think that you are raising the question of, if you can acquire Intel just like that, what prevents you from doing the same to other companies like Nvidia, AMD, or Palantir, any company that you deem it's national security, right? And that opens the door to some sort of corruption that has never been seen in the US in quite a long time. And the biggest concern there is, imagine you're a CEO and you want to inflate your stock. You might, convince the government to take a piece of your company and you can get a bonus from that. So my biggest worry is, if you're using the government to give you unlimited cushion and money, it might not be the most capital efficient move because you're making the companies less competitive.
It rarely tends to be the case that, the government spends money on a private company and the company does better or operates, efficiently, as you say. So yeah, I'm not, I understand why it's important to do so, but I'm quite cautious as well.
Yeah,
I don't know. I don't think it's hard to say. Intel is a very mixed bag, because I think they have the talent, or at least they had the talent. I need to verify if they still do. And so they have the talent, just for now, to be great, to be, competing with AMD at the very least, if not Nvidia, for their chips. But yeah, let's see. There's hope, but I'm more on the cautious side than anything. I think it could be another scenario of like a government bailing company out, and the company just coasts along with the government money.
Yeah, so that's my concern, is just hopefully they can use the government money more efficiently. But from what I've seen with GM and Ford in the 2008 bailout, that has never really panned out well. When you buy out or when you take a partial stake in a private company, especially when it comes to industrials and production, these companies end up becoming too complacent afterwards. And who knows? Maybe Intel can turn things around, but when they weren't able to do that with private capital, I just don't see any good examples if you've been using taxpayer money to do this.
Yep, that's true.
Yeah.
That's true.
Yeah. Yeah. So I think we can end it off there.
Yeah, let's end it off there. I think one thing we'll say
Okay.
is keep an eye for the markets next week. If there is some support in the initial market days, the Monday, Tuesday, then we'll probably in for a bullish market up until some catalyst event. So keep your eyes out, keep your ears out, and good luck. Thank you, everyone.
All right. All right.